Hello, how are you? Hope you're good. Welcome to today's backtesting session. And today's video is just on I want to backtest from October to December and see how I would have played it. Like I would have played every setup. Just want to check the London session and also the New York session and see what happened during this period. So yeah, let's get right into it. So this is 3 months time frame for DSY. This is our 3 month time frame, and let's see. We have this, which shows that overall we kind of have like a bearish structure. This is our previous lower low. So this is our previous lower low, our external liquidity. Another external liquidity is hanging here. There's also an external liquidity. So if we see this as a lower low, this as a lower low, then this can be a lower high, right? So let's have this as lower high. So this is our lower high. So if we're working with a bearish market, that means we're at a point of interest, and you can see this imbalance, this 3 month imbalance here. This is fair value gap. We're an ICT trader. Well, so this is a fair value gap or imbalance, anyone you want to put it. And price is currently price has reacted from the imbalance rather. And we have this. So let's go to 1 month. We have this on our 3 month time frame, right? So let's go to 1 month time frame. From our 1 month, we have this. For me to say that, yes, we are already retracing, then I want to see this 1 month break of structure to know that, okay, like to give me that confirmation. So we are bearish. So I'm expecting and I'm anticipating an shift in structure around this area. But then price don't have to like give us that break of structure, right? It can just react from this area, this cube here. Price can react from this area and just keep going up, because for our 3 months, if you notice this area looks like a relative highs. Like this area looks like a relative equal highs. So we have liquidity and gain here, like a lot of liquidities. But then they don't really have to come to this area to clear this, and they can just keep going down. But then markets can come up and clear this. So having this in mind, that okay, markets can actually come up to clear this. And look, if we look to the right, we have all these candles, these big moves here. The markets can actually mitigate, like go up and react from it. We can't predict, like we can't say that this is exactly what markets will do, but we can just analyze, study, and flow with it, flow with whatever thing we say. So I have this. I'm expecting either a break of structure here, a shift in structure, or reaccumulation to keep going up. So the market can do anything. And note, below this cube, we have this fair value gap angle here. You have this fair value gap here. So the shift in structure is looking real a little, like it's looking more attractive because of this imbalance. Market can just, come down here, clear it, then keep going up. We get, keep going up. Can react from this imbalance. Okay, let me just give you, this is what, like, I want something like this, like break, then come to this imbalance, then go down. And do this, our market can just, do this. Was this break? You get, then retrace back to this area and go. So anything markets wants to do, sure, we are ready, right? Yeah. So markets can do this also. So with that being said, so let's just go to lower time frame and start our back testing session. So let's go to the week today. So okay, now let's check where is October. This is October. Yeah. So let's just put this there so that we know that we are looking at this area. And if we can see from October, from September was the last bullish candle. After that, October bought a little, then sold. Then so this was the open, went up, then came down again. Then November sold heavily, and December is kind of doing that also. It's also selling. So now I want us to like check how they transit from the bullish structure to the bearish structure. Let's start. Let's go to the 1 hour time frame. Now this is our 1 hour time frame, and this is like the peak of September bullish move and the beginning of the fall, the sell. So now let's just see. This was our last higher low. We have this higher low and higher high, then shifts in structure. Markets breaks this structure here and show us that okay, we've stopped buying, now we want to sell, right? So markets should trace back to this available imbalance. Okay, now so not, I'm used to imbalance, I'm not really used to fair value gap, so I'll be using imbalance more, but have it at the back of your mind that imbalance and fair value gap are the same thing. Like when I say imbalance, I'm also saying fair value gap. So now let's mark this. Was this up to 50%? Yes. Now, we have the discount zone and the premium zone for the Fibonacci. Fibonacci kind of like give us confidence, like it makes us see that it give us that confluence for every trade I want to take. So 50% and above is premium, 50% and below is discount. So anywhere above 50% we can sell, and anywhere below 50% we can buy. So since this imbalance is kind of like close to 50%, then I will try and okay, let me play the 50% of this range, because this is our current range. Like let's just assume this is not there. I don't have the replay button, so just going to use this. So now we have this range here. So 50%, just going to like put my entry here at this 50%. My stop loss can be around this area. And my target, let's look to the left and see. Target would be like here. And what happened? Although this happened after like a few days, but we're still able to meet our target, right? Yeah. So now we add this on a Thursday. So now I want to transit so we can see how we actually moved from September bullish structure to our bearish structure that we are in right now. And for this area now, we have imbalance as our confluence, we have this break of structure, we have all these big moves, the market retrace back to it on a Thursday and mitigate out of the 50% of the Fibonacci. So let's move to like 15-minute time frame. So now this is 15-minute time frame and this is the data that is available for us. So let's work with this, yeah. So now we already know that we've transit to the bearish structure, right? So we want to look for more of sell and less of buys. So now we have this move, this down move, then markets came down. Actually, this is like a London session. So you can actually buy and sell this. You have this imbalance here. You have this imbalance. And this imbalance led to a break of structure. This led to a break of structure. And we retrace, we have this imbalance, this big break of structure. So we can actually sell from this place. But guess what? This actually did not give us our RR. So let's see. I would have loved to like go to 5 minutes. Well, this data won't be available in 5 minutes. Stop loss around this area. And let's see if we have 1 to 3. Because your first TP should be 1 to 3. Okay, yeah. We're able to get 1 to 3 from this. And for me, my targets will have been my first target 1 to 3. The second one, this imbalance here. This imbalance here. And my last TP will have been around this area, or I will check the left hand side and see if I can target, if I can see something now, right? So like this now, I'll be like expecting like 1 to 6, but guess what? We only have like 1 to 3. The market eats me out. Like markets will have eat me out if I've entered this trade. Then, but during like notes now, during our London session and New York session. So now looking at the New York session, before the New York session, during the transit between London and New York, we have this imbalance here. We have this imbalance here. Markets. So for me, I know we're going to sell. So all this buy can just be like a liquidity swing. Plus higher time frame also will like influence it. So now having this higher time this looking at this imbalance here now during London and New York session, we mitigate out of it. So my entry would have been in this the close of this imbalance. CP here, or it can be here. So just be conservative. My first CP 1 to 3. My first CP will have been 1 to 3. And the next one will be this place. So 1 to 4. And that was what happened. You could have entered again. It gave us another entry here. This is our point of interest, POI. We have this point of interest here. Market retrace back into it. Market retrace back into this candle here. This candle retrace back into it, then move down. So this was our first entry, second entry for this buy, right? So that was it for that day. Then the next day we have this Thursday. This is London session, this is New York session. So how would I have played this? Market doing London session, market sold down. So I said, okay, I know that yes, I want to sell, right? Do we have any imbalance? We have an imbalance here, imbalance here. Let's draw a fib. From here to here. 50% and above. We have two imbalances here. And according to ICT, it will be more profitable for you to it makes sense to play the first imbalance and just watch out. So now this first imbalance, price actually reacted from this first imbalance, as you can see here doing London session. And we are, October, November shows that we are done with buying, right? Like the big move for buying. So all my setup here is that, okay, all my setup for October will majorly sell on DXY because I trade Euro USD alone. So I was bearish on DXY population Euro. So I was using DXY to trade Euro USD. So we had this opportunity here, and this gave us what? This gave us 7, 1 to 7. And after that, I had this internal break of structure. You have this break here. You have this imbalance here. So this is like our second entry, right? So we have this. You can play the opening of your imbalance, fine. But me, I don't really have, I don't really like a lot of drawdowns. So I just play the opening. And this one give us 1 to 10. So this two is like 1 to 17, like just like that. You get. But then TP 1 to 3, TP, first TP 1 to 3, first TP 1 to 3. Because anything can happen. You can't project this big move. Market can just give you that 1 to 3 and react and keep going and keep buying. Even with the fact that we have this big bearish, strong bearish believe that okay, this is what is the market is going to sell. Markets can just do another thing and buy, you get. So we can't say that this is exactly what will happen. So just do our analysis and wait for it for a clean setup and play it. So we had this opportunity. Then later on we had this break off. We have this lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then break of structure here. So just because we say that market is now bearish does not mean that we can't buy, right? It's in structure rather. We have this shift in structure here. Then looking at London session, it was London session that gave us this real shift in structure, and it left some imbalance while doing that. So we have this imbalance here. We have this imbalance here. But as you can see, market did not retrace down to this. So the London session did not give us that opportunity to enter. I want to have joined them with this in this bullish move. Only if I see a lower time frame confirmation, like maybe 5 minutes, 3 minutes, because I do use 3 minutes for my entries. So now we have this little retracement. The market went up, retraced a little, went up. Then during New York session, market gave us this imbalance here. Gave us this imbalance. And market react and came down, then react from this imbalance. In this situation, I won't have been like selfish with my SL, because one, the range is very small. So and since morning now, I don't have any trade, like not trade. I'll just okay, let me just read the opening so that I won't like miss out like the way they've not really been retracing deep. So this drawdown, I would have experienced it, and but it's fine. It's just a little range. So we have this TPA, and this gave us 1 to what? This gave us 1 to 4. A nice 1 to 4. Do we have anything that it's reacting from? Let's see. Not really. So market just like gave us this equalizer, then came down. So that was that for that day. All these gaps, I won't trade them by 12 o'clock. Most times I'm always out of my trade because I have other things I'm doing. So when I have this, like after this, then for our Thursday, what is it? October 6th. So we retraced a little. We retraced, we have this fair value gap. So markets will definitely come and fill up the fair value gap and all. So on this very good, wonderful day, we have this imbalance. Yeah, we have this imbalance here. We have this shift in structure. We have this shift in structure here. The market retraced back into this imbalance, and the opening split from the opening of the imbalance. Then went to first TP will be this IA. First TP will be this IA. Well, 1 to 3, don't forget 1 to 3. Then this I, like using structure, this I. So now for our New York session, it gave us another opportunity to add to um our trades. We have this imbalance here. The market retraced and came down, opening of the imbalance. Opening of this imbalance, and market went up. Now let's see, what do we have? Okay, that side would have given us 2.8, 1 to 3.5. Then we have this 1 to 7 that day. So now the next day we have this liquidity sweep. This buy side liquidity sweep, or sell side rather. This sell side liquidity. So market cleared this. Then during London's New York session, markets came for this buy side liquidity. So we have this buy side liquidity here. So we clear these two sides. So markets came down at first to do what? To clear the sell side, then later cleared the buy side liquidity, leaving this huge imbalance here. So I really want to see if they will like play from this imbalance. And this is my imbalance here. This is my imbalance. Markets move. Was this up to 50% of the imbalance? Yeah, so 50% of this imbalance. Market reacted from the 50%. My stop loss would be the low of this imbalance. First the P. 1, 2, 3. 1, 2, 3. Then do you have any higher time frame? Okay. We don't have data for that one. So now, like looking at the left hand side, let's use um another trading view store. So here we can see that this side now it's like one leg, right? This side is like one leg, and this other side is like the retracement. Like market has to like buy up to mitigate out of anywhere around the discount zone, then come down, right? So now, looking at uh setups that we're trying to do now, we know that we still have higher sets up, so we can actually put this thing up, like we can have a higher time frame setup. Like now, let's check this side now. Let's check this area. Um, this is 1 hour um of DXY. This is our 50%. Our 50% here. Like looking at this now, we already like past the 50% in day 8. This is day 8, right? Let's say 1, 8, 9. So like this Friday, now this is Friday. I won't want to like hold any trade because it is Friday and I don't know what will happen on Sunday. So I'll just close this when I have my 1 to 3. So and this actually gave us 1 to 3. Then just close it up. Then wait for Monday to give you like setup. And on Monday we were able to like get something. So Sunday came, sold down, then went up, give us this break of structure. We have this break of structure. Then we have this imbalance here. We have this imbalance sitting here, right? So markets came down. Markets came down to this little POI. Yeah, I'll call this a POI. Market came down to this POI here. The POI. And went up. This was during a London session. So we have this. Then this gave us what? 1 to 4. 1 to 4. And during New York session actually came back to our entry to respect this imbalance. Let's mark out this candle here and see the 50%. I have this candle here, right? 50% of this candle, it's kind of aligns with the close of this imbalance. Like, is it close now? Opening of the imbalance, the opening of this imbalance. So now let me mark the 50% out and delete the fib. So we have these 50%, right? Yeah. So let's remove this. Then this. So we have 50%. Then I'll play this for New York session. Yeah. First TP. Yeah. Right. Now that I know that I'm above 50% and I'm at premium zone, I won't have like, so now that I know that we are at premium zone, I don't want to like be having a target of 1 to 10, 1 to 20, because I know markets can actually react um from that point at any time, from that zone at any time. So my 1 to 3 will just be there. 1 to 3, 1 to 3, 1 to 3. I won't stress myself at all, because we are at premium zone. So right now we are at premium zone. This was on a Monday. And on our Tuesday, now we have this higher low, higher high, higher low, higher high, higher low, higher high. And we have London session came in. I know we have to retrace to this imbalance here. Let's assume we don't know about all this. This is my last higher low, my last higher high. So what I'll be looking at is either a break of structure here, either we have a break of structure here, a shift in structure, or market react from this imbalance. So I want to target this area here, which, let's see if it's in line with the 50% of this last candle here. Yeah. So I want to target this area here for myself. So let's see. So what happened? In London session, we had this little liquidity sweep, same sell side liquidity sweep went up, kind of like tap this buy side and went down. So now I'm very sure that on, no, let me not say I'm very sure. Let's say on lower time frame now, we should see an opportunity. But then with my SMC knowledge, I can actually play myself from this place. I can play myself. Can have a cell set up there. This is high, low, high. So, but in this kind of trade now, since there is no imbalance, I won't put all my normal risk. If I risk 1% normal, I won't go for 1% again. Probably go for 0.5% of my account, right? So let's see. We have, what do we have here? 1 to 4 point something. Let's reduce our risk. So by reducing the risk lot size, risk, we have these 1.3 already. And now, while eating our TP, we have like an imbalance here. We have this imbalance here. So I was okay. This is an opportunity to like enter again. But for me, or like personally, I won't enter this trade because one, I have this idea that this is just a retracement for us to keep going up. So I won't enter this trade again, but this is actually an opportunity, to enter another sell. Some people will definitely enter. People that have high risk appetite, or what they call it. So this also kind of like gave us what again, 1 to 2, then went back up to mitigate out of this place, then gave us this break of structure. This happened during the break between London session and New York session. And do we have any imbalance? Yes, we do have an imbalance. So now I have this cell. I did not see, we have this break of structure to the bearish side. The market did not create any imbalance for us, right? Even if I want to be stubborn and take this trade, I'll have played this side here, and it will have hit myself, right? Because we have this shift in structure to the bearish and to the bullish side. We have this candle here, so I'm kind of confident with playing it here because it's kind of aligned with the 50% of this sell candle here, and I want to buy from that area. But then markets came down, it's my sell, they break the structure. Now I now have more confidence in my buy and in my sell, right? I have more confidence in this sell now. I have this imbalance here. This is 15 minutes time frame. Now market is retracing back to that area in London session and during New York session. So time and price aligns with my setup. I have my break of structure. I have my imbalance. So I'm free to go. So I can take this trade conveniently now. So since I already have like one SL, it's already, I'm still in profit. I already have 1 to 3 in the morning, one SS this thing. I'll just okay, let me reduce my risk. Now overall, we are bearish, right? So I will have played this now. Play this 1 to 3 at first, anyways. Let's see. Here is what 1 to 4. So 1 to 5. So yes, I'm fine doing a New York session already. But then if you want to play more, this actually went down to 1 to 9, 1 to 10. You see? So let's see what happened. Why did they why did they have this big buy move from this place? We happen to have an imbalance here. The market reacted from this imbalance. I won't have known the market to react from this imbalance. So I won't be in that buy. Although some people can actually buy this, but then no. For me, there's no opportunity here for me. For me. This can be a shifting structure, but I will have missed this buy. That one is sure. I wonder I will have missed it. But then I already have 1 to 3 here, SL, then another 1 to 4. So 1 to 3, 1 to 4, 1 to 7, SL -1. That is what 1 to 1 to 6. So 1 to 6 in a day is fine. Yeah, right. So on our Wednesday, this does not even look any attractive though, just like consolidating. So if I want to do something, I will have just like wait and wait and wait, and I won't see anything to play. Yeah. This is DXY. We don't trade DXY. But I trade Euro USD alone. That's the only pair I trade, Euro USD. I'm just a beginner in currency. So one pair for now, one pair until I turn to a professional. So now we have this break of structure, but then there's no imbalance, nothing. So Wednesday is definitely not for me. We have this move, we have this imbalance. That's so delicious. They're just doing their attention. So here too, yeah, we have this, little break, retrace. You want to sell, you could have like sell from this place, from this point of interest. Then move down, came back to this imbalance. Then doing not London session, we went up. So now I want us to like focus on this place. We all know that on our 1 hour that we are bearish, like on our higher time frame we are bearish. So all the buy that we've been enjoying, that is just like a retracement for an expansion. So now on this 15 minutes, if you notice on this 50 minutes, we clear the board here. We have this liquidity. We have this liquidity sweep here. Let me just use equalizer. But it's not equalize. Then we have this. So the first one was sell side liquidity. Let me just use that. We have this sell side liquidity. So the first one now is sell side liquidity. Then after clearing this sell side liquidity, market went up and clear our buy side liquidity too. You see this? This gave us, then they went down again. On a normal thing, like normal circumstance, someone will have okay, they clear the sell side, then the buy side, then let me buy from this place, Let me buy from here. This is my fair value gap. See if they will react from this place. But then we know that we're at discount level. If you're buying more and buying and buying and buying, definitely you want to work against that range, right? So now, when we now have this break here, how about this break here? We have this shifting structure here, showing that we are bearish. We want to continue our move, like we're done with buying, with retracing. Now we want to continue our expansion. We have this candle here, this candle resting here, which also have imbalance. Some people call it balance price action, like this area. So we have this POI here. And market actually retraced to this area. Well, I will have just sit down my ends here and wait for them to get to my point of interest. What is area actually my point of interest? Oh, yeah. Then what happened? On that Friday, no break of structure, nothing. Although we had a break of structure here, it's here, then sell, but the sell did not like last. So now on Monday, we now have another break of structure during London session. We have this shift in structure. We have this imbalance here. Now is imbalance here. Then we have this. So SL here. But this gap here, I'll be kind of like scared to like put my imbalance. I'll be like, I'm actually mitigate out of this imbalance. So I'll just put, let's say here. Then my first TP here around this area, 1 to 3. So 1 to 3. So all this move was 1 to 3. And this actually the reason why this move was just 1 to 3 because of this SL on a normal, like normal situation. The SL should be around this area. So this gave us 1 to 5. Then on Tuesday, nothing like that. So we had like some move. That is imbalance here. Slightly imbalance. Then we have this. So we have this. So this was just like 1 to 2, so it's not looking nice, right? Yeah. So we had that. It was okay. Now, just because this thing looks small does not mean there won't be opportunity. Now, looking at this, we know we're at extreme low, right? We know that we're at an extreme low. Market has cleared the sell side liquidity and it was going up, low, up, low, up, low. Have this imbalance here. This one, you have to like train your eyes to sell this kind of setups. Like you can actually buy from this place, buy a stop loss year or year, and you'll be fine. But then for me, this is okay. You have a very nice imbalance. We have a break. Markets came down. And we can enter here and buy up and we'll be fine. Then actually during New York session, we came back to this level and went up again. You see, and we went up, really, really up. So since we know that okay, we've sold. Where is it? I think we're 19. So since we know that okay, we've sold, then we are done selling. They want to like buy. And you can see the market is kind of like buying here, right? So we came back, but we have this imbalance here. We have this imbalance. Market retraced, then went up, and really, really went up. Then again, we have this imbalance here for London session. For New York rather. For New York session, we have this imbalance here. The markets went up. So that's that for this is what we have to like October something. Okay, getting tired of talking. So we also have this imbalance here too. So now the thing is for checklists, let's go to tech. Now for our checklist now, if you want to like trade in intraday, you want to identify the draw on liquidities placed for intraday traders. You want to identify the draw on liquidities. That is the buy side liquidity, buy side slash sell side liquidity. Then you want to identify the imbalance also. You want to identify your imbalance. Sorry. So your imbalance. You want to see if your imbalance will cause a break of structure or shift in structure, right? So you want to identify these three things. So when you identify these three things and it is clear, it is buy side liquidity, You want to have this cell, this break of structure. You want to have like an imbalance here. You understand? You want them to come down, clear some buy side liquidity, then clear break structure or shift in structure, change the structure. But while doing this break of structure or shift in structure, you want to identify if we actually have some big moves like fair value gap or imbalance or gap, or we have different kind of imbalance anyways. Like so you want to see them, you want to see that big move that they can actually, come back and retrace from. So you want to see this for um for you to buy. I want to see this for you to buy. And for the sell too, you want to see this. You want to see this. Then sorry. Then for the sell, you want to see this. Buy up first, come down, break structure. But while doing that, we have our build shifting structure or break of structure. Shift the structure or break of structure. We're expecting some imbalance, any kind of imbalance here. Get. Then we're expecting market to like retrace from this area. So this is the pattern I want to see. So this is the pattern I want to see for the buy side. I want to see this. For the sell side, I want to see this. So now, if you can actually complete it, because I myself am kind of like doing back testing for October, from September rather, personally, from September to October till December. So because I started trading currency September, I think. Yeah, I think September. So I want to like go through all my trades. This is my Notion where I have most of my setups, like those times when I trade. So okay, this is September zone. So euro, I started trading euro USD, as you can see. I did say then my synthetic. I've been trading synthetic for like 2 years now, but I had to stop because of time and price. So I was in review of other peers also, but kind of like Euro USD more. So my October, oops, this is October. November I was extremely busy, so I did not. I only did analysis, back testing and all. So for Euro USD. So I'm kind of doing review of what happened and all. So you want to identify all those things. But SMC traders, you identify the point of interest, your imbalance, your range, Fibonacci, and all. So as time goes on, you definitely not need fib again because you already know, okay, this place is premium, this place is discount. You can just like picture it by just looking at the chart. You can say, okay, yeah, this is it, this is it. So this is what majorly I try to look for. Then I expect market to like react from there, drop. All right, so this is the pattern I kind of want, I look for. So I'm going to stop here. You can finish up with November and December. Although I may still do a video on November and December anyway. So thank you so much for watching today. And if you like this video, kindly like, comment, and share with your team, with anyone that you know that is just into Forex, and even the professionals. So yeah, thank you so much. Thank you for watching to the end.